Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor, and we're going to take a look at several charts here, and I'm going to go over my analysis and thought process. And the idea here is for you to watch and hopefully learn and potentially get some trading ideas to help you profit in the market. So the first chart we're going to look at is Apple. And Apple, one thing that's really important here that I want you to notice is that we came to, and this is actually our target here in the membership. Our members profited nicely. We entered in Apple down here on this little dip right there, about 106, 105, and we ended up selling today as our profit target was met. And I believe that we could potentially see some downside here in the short term based off of it. If you know, if you've been following these videos, you know that I've been very bullish on Apple for quite some time. I've been bullish on Apple since right down here. So don't be mistaken here. I'm not some long time bear. So we came up to our profit target, and the reason that was a profit target is because of this little resistance right here. You can see that it was an area that Apple had trouble with before for several weeks right there. And another thing, and I'm going to draw it for you, this level right here was based off of these highs over here to these lows right here. It was the 61.8 Fibonacci retracement level. You can see that right over here, 61.8 Fibonacci retracement level from these highs to these lows. So that was another reason that that was our profit target. The profit target has been met. So I'm not particularly convinced that Apple has a lot of upside left in it in this very near term. I believe that we're going to see a little bit of short-term downside, but I do believe that it still is buyable here on dips. So I think that if we get a dip down to about 109 to test these previous highs right here, that could get bought as well. And I'm going to see if I can draw an uptrend line right here and see if that'll match up well. So that's a decent uptrend line right there. We have a touch here, right there, and that lines up perfectly with this level right here. So we'll see if we can get a bounce from there, but definitely you know, a level that you want to be lightening up here. At least that's the way that that's what we did here at the Trading Analyst. So congrats to the members if you're watching this. The next chart that we're going to be looking at is Netflix. And Netflix, nice overall chart here. Here's a break over that downtrend line. Okay, here's a touch. Broke over it right here. And now we have a new little uptrend line right here. Kind of a similar look to Apple that we just discussed. There's a touch. Here's several touches right here. And then here's a support level right here that we bounced off of, right about $100. You can see that it was resistance right here, right there, here, and then we broke over it right here. So we're retesting it right now. We also have the 200-day moving average, which is right here below that, as well as the uptrend line. So anywhere within this area is an area that, if you're bullish on Netflix, that's an area that you want to see hold. Okay, the next chart I want to look at is GoPro. In GoPro here, we have this uptrend line that have gotten several bounces. Here's a touch, there's a touch, here, right there, and we're coming up to another retest of that area. And it's also the 61.8% Fibonacci retracement from these lows to these highs right here, and that's this level right here. You can see that 61.8 Fib retracement is matching up perfectly with this uptrend line, as well as a little bit of support from these few candles right there. So can definitely see a bounce right here, about $14.50 to $14. It may want to flash below and then hammer back above it. If it closes below this trend line, I'm not really going to be interested in trading this long until we see how it reacts to the 200-day moving average, as well as this support right there from these few candles right there. So definitely in the near term, we can definitely get a bounce here. If it closes below that trend line, I'm not going to be interested personally. The next one I want to look at here is Twitter. And Twitter, another one here that we played really nicely. We got long on Twitter down here against this 200-day moving average, and we sold out right here on this green day right there. And 2 days later, we ended up seeing a big bounce lower. And the reason that we sold there, and I'm going to get in after I discuss this exactly what we're looking for in the future for Twitter. But first I'm going to discuss this. So why did we sell up here near 24.50? Well, because it was these previous lows right here. Okay, so it's no surprise that we got a rejection right there. Okay, and I didn't just draw this line right there just because we got rejected right there. That line has been there, and it's been our target for the entire time since we traded it from the lows here. So we traded some options on Twitter on that, and our members saw a nice big gain on that. So it shouldn't be that big of a surprise that we saw a rejection at that level because it had traveled pretty nicely up there, and it was previous resistance. So the next thing that I want to cover here on Twitter is where we bounced from. We bounced from, well, I wouldn't call it a bounce, but a hold of this 200-day moving average. We've held it here, here, and again right here. So definitely a significant level to hold on this 200-day moving average, and that's definitely the area that you want to see hold if you're bullish on Twitter. Another thing I want to note here is we're right at the 61.8 Fibonacci retracement level. Here it is right there. You can see that right where we're at, and that's drawn from these lows right here to these highs right there, and that gives you that 61.8 Fibonacci retracement level, which matches up well with the 200-day moving average right here in that previous low that we made right there. So definitely an area that you want to see hold for Twitter, and I definitely think that it's very likely that it holds and that it fills this gap up here at about 1960. The next one I want to take a look at is GILD. And for GILD, I want to cover the monthly chart here. Okay, a lot of people don't really scroll back this far, but we are going to right now, and I'm going to show you why. So GILD, starting in 1994, has been in a massive uptrend. You can see several touches here in 94. Here in 98 you have a touch, and then here you can see we have several touches in 2011, in 2012, and we're coming up to another touch right here. So between $65 and $70 can definitely get a bounce. And just keep in mind, this is a monthly chart, okay? So the month has to close below it. See how right here we had several months that broke below it but ended up closing back above the trend line. So keep in mind it's a monthly chart, and just know the time frame that we're dealing with. Alright guys, thanks for stopping by. Appreciate it as always. Again, if you like the free videos and the free analysis that we do, go ahead and give the free trial out for a spin. The free videos are nothing compared to the membership, and if you want to participate in the profitable trade alerts like we mentioned on Twitter and Apple, you're going to have to join us with the free trial. Why not? It's free for 7 days. We'll see you over there.